Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hello, everyone, and welcome to the Driving Alpha podcast, where we interview top GPs of venture funds to talk about how they drive alpha for their portfolio companies, their LPs, and the rest of the entrepreneurial ecosystem. Now, I am thrilled to sit down with two leading investors. We have Renata Quintini and Roseanne Wincek, the co-founders and GPs of Renegade Partners. Now, Renata launched her investment career managing assets at Stanford's endowment before becoming a partner at Felicis Ventures and later joining Lux Capital, where Roseanne started out in venture at Canaan Partners and then later went on to join IVP. In 2020, they teamed up to launch Renegade Partners, a San Francisco-based fund that backs transformative startups at the Series A stages. Their approach goes beyond capital. They work hands-on with founders to help them navigate the pivotal stages of growth. Some of their notable investments include ANSA, Aerospace Intelligence, and Coda. Now, welcome to the podcast. Now, thank you for being on the podcast with me. But Renata, I want to start with you. Can you please share a little bit more about your professional journey, starting with your time at the endowment and then joining newer funds to then, your role at Renegade Partners?
Thrilled to be here, Zoe. Thanks for having us. Yeah, I think, my career is a bunch of lines that at some point connect, but the thread is always luck and being at the right place at the right time. I'm actually a lawyer by training. Grew up in Brazil, practiced law. Venture capitalists used to be my clients. I got to see a little bit of how the job worked. And also technology was evolving. It was the early 2000s. I'm dating myself here. And that kind of drove me to come to the US, Silicon Valley in particular, to get closer to how law was evolving and all of that stuff. And then when I got here, I said, oh, wow, I want to be a VC. But, female Brazilian lawyer, early 2000s, I was very much out of central casting. So my path to venture was a very windy one. While I was doing my Stanford MBA, I realized, Stanford Endowment put venture in business. And I found a way to get working for the endowment. And that's when venture was transforming. Micro VCs were getting started, the rise of the super angels. And Stanford didn't have any exposure to that. So I raised my hand and I said, hey, can I, spend time here understanding what's driving all of this? And the big TLDR for that whole process was realizing the 10x cheaper to start actually changed product market fit for founders. And if you go back to the origin stories of all those micro VC funds that now became establishment, and the industry has evolved so much in 15 years, they all were prior operators that were helping founders either get to product or revenue faster. And that was actually a super important lesson as we thought a lot about what has changed for the tech environment now and building Renegade. And I'm sure we're going to get to that later. And then, again, being at the right place at the right time, I joined Felicis Ventures in the very early days. It was I'd in some deep myself, an EA, and nothing else. Sort of building a brand from the get-go, building a firm from the get-go, a portfolio from the get-go. And I was there for essentially 7 years, always a generalist, investing early. But so many lessons around firm building and also investing. The TLDR of the Felicis experience was the biggest job in venture is finding and backing iconic companies. It's not owning 10% or 15% or 20%. That's a byproduct of backing amazing people doing ground-changing things. And then there's this notion of, the power law of venture is the only rule that you don't break. Again, a big lesson that we kind of kept for things that we do at Renegade. And then, as you said, joined Lux. I've been friends with the team there for over, for now 20 years. And I was fascinated by this idea of company building in frontier spaces because you have to turn a technology into a product into a company that works, and all of that, while matching timelines and what the market expects from companies, which is different than just pure software companies or traditional spaces. And this idea of starting my own firm was not something that I was actively thinking about. It was really the right person, again, the right time, and be really lucky. And it was all going back to a dinner where I was with Roseanne, and we go back over a decade and friendship and all of that. That someone asked, what would you do if you were to start your own venture capital firm? And we're completing each other's sentences on so many critical things that were not consensus. We had a lot of hot takes that now I think the world agrees with us a little more, but back then it was very much hot takes. And then we kind of pulled on that thread. So yeah, I think the summary is right place at the right time. Very lucky.
Yeah, thank you for that overview. And before we go on to Roseanne, I just want to ask a follow-up there. I mean, like you said, the core theme is right place, right time. How do you kind of know that this is the aha moment to do something big and make a big jump? Like, is it a gut feeling? Is it a signal? Like, how did you wrap your head around that?
It was essentially taking risks because it was never obvious, right? Like leaving my country, leaving my profession to go start something new, not obvious. And actually, so many people question, like, why are you doing this? Joining the endowment, actually also not obvious. And then going to a firm that was just getting started, right? Like now Felicis is establishment, but back then it was not. And, it was really building something from the ground up. And I joke is the beginning of a bad joke. A Brazilian, a Turkish, and Indian enter a bar. That really was the three of us trying to do something defying gravity. So there was always this asymmetric thing of you take a risk and the other part is the give and take. There was always situations that I felt I can bring something to the table and I can grow and extract at the same time. It was never unidirectional. So I think that's also how my gut felt comfortable taking the risk. And even starting Renegade, right? Like Roseanne and I have been doing this. We have the track record. Like we had a lot that we could pull from, but not easy. Defying gravity. It was wicked, still is.
Yeah, I mean, I think that's such a good point, kind of, especially like in that kind of career lens and when you make your moves and like, in hindsight, things can make sense, but like that's also just like the storytelling of it. So much of it for your own career is like, and I think like what sometimes like especially like young people get wrong is like, oh, it's like I have to do this and then I do this and then I do this and then I get to do what I want to do. And it's like, what do you actually want to be doing? Because you're spending your most valuable, scarce resource, which is your time that you're never going to get back. And like, yes, you want to do things that are going to like help you learn and grow and be creative, but like you also want to do the things that make you excited and amazing. Like you're never going to be as good at something as somebody who loves it. Right. And so if you are putting yourself in situations that you aren't in love with, like you're just not going to be as good. Like, right. Like 10 out of 10 times. And so I think it's also, there's a lot of like self-knowledge and like, sure, like, my career feels the same way. Like I had started like in a biophysics PhD that I like dropped out of and then like, started a company and kind of went into venture from that. But it's like, I didn't start like a super successful company that like VCs were clamoring to get into. And that's how I got into venture real. It was just like, I thought the world was exciting and it was like, 10x easier to start a company and anybody could raise a couple $100,000 to start a company. And like, that was so exciting to me, right? Like, that's what I wanted to like spend my time on. It wasn't like a calculated move of like, oh, if I do this, then I'm going to be able to get like this job later. It was just like, if I do this, like, I'm going to scratch this itch and I'm going to be fulfilled and I'm going to grow and I'm going to be challenged. And like, and that's what it's going to do for me, not kind of create like that, the LinkedIn step.
Yeah, and I mean, I'm sure this is true in most professions too, but venture is definitely one of those. I mean, just reflecting on how I got to my seat today, it was more or less the real trigger was I met a guy at a bar and he mentioned he worked in venture. I did SPAC trading before going into venture and he had a SPAC and I was like, great, I'm one of the few people who actually trade your vehicle. Let's go meet up for coffee. And then through that conversation, he's like, you know what? I'll take a chance on you. Do you want to come and join the team completely out of the blue? But it is one of those things where my thinking was never, I'm going to end up in venture. It was just, okay, this is something that's exciting, an asset class I really want to look into, just working with the earlier stages of innovation. And then all the stars kind of align. But Roseanne, I want to go back to your background. You said you dropped out of this program, started a company, worked with some big name funds, and then launched your own fund. Like definitely a lot of twists and turns there and really trusting your gut to know these are the next steps. So if you could just give us a little bit more color on your journey to where you are today.
I grew up in Cleveland, Ohio, and I came out here for college. I went to Cal, go Bears, and then I stayed and went to start a PhD. I was a chemistry undergrad, and honestly, like I was a chemistry undergrad because my freshman year roommate was pre-med and he was signing up for all these science classes. And I was like, oh, like, I like science, like, let's take science together. And so like, I did that and I liked all my science classes. So I became a chemistry major and then, decided to go to graduate school. It was a little bit of like, I didn't know what I wanted to do when I grew up. And I went to the career center and they said like, oh, you're a chemistry major. You either like go to investment banking or you either go to graduate school or you do investment banking. And I had never heard of investment banking. So I went to graduate school. And, I went to graduate school, but but again, like, it was kind of one of these things of like following your heart. Like, I like like I like to say, like, I like thinking about science and talking about science, but I don't really like doing science. Like, the act of science is like very lonely and solitary and intense. And like, if you are like a, kind of person, it can like really make you loud very tight. And yeah, and so I started a company with like a couple of friends that I met at Cal in like the Facebook app days, like, which were really fun until they weren't. And then we went out of business. And it was like September 2008. And our parents were like, you idiots need to get jobs. Like, what are you doing? And then I went to like a bioinformatics software company and did like product there. And it was really lucky because I like knew, like, I was like scientific enough that I could like talk to our customers. And so like, that's like how I was valuable to them. But like, it was like scrappy enough that like I got to do product stuff, even though I had like literally no knowledge or business doing that. But it was like great learning. And it was actually kind of there that I learned about venture. And cause like I never thought about it as a job that people had, right? Like, when I had pitched VCs, they were all like these old dudes, right? Especially like, this is like 2009, 2010, like no, like there weren't associates at venture firms, right? There weren't any young people that like worked in venture. So I never thought about it as a job that I would have. And one of our board members like asked me if I never thought about it. I went home and read everything I could. And I was like, oh my God, this is my dream job because it's the stuff I like about academia, like building mental models, trying to figure out how the world works. But instead of pipetting, I got to talk to people. So it was just like a better fit for my personality. So I went to the GSV for business school. And then from there, went to Canaan and spent 3 years there. I'm doing like seed and A. And then IVP approached me asking if I'd ever thought about growth. Like, I hadn't. I was never a banker, right? Like, I never grew up like being like, I want to be a growth investor. Like, it kind of blew my mind. Like, like when I went to business school, like all these people who have been consultants, I like didn't even know what consulting was. Like, I had never been on like a business trip before. Like, the idea that like people had this path where you like went to college and you did investment banking and then you like went to like a growth firm or a private equity firm was like very foreign to me. But I liked the idea of like having more math, having more numbers, like getting to see like having more meat to like see how companies grew. And so like that was really appealing to me. And I just like I thought also like back then, like I joined in 2015, which felt like, back then like growth wasn't what growth is today. And there weren't a lot of firms doing it. And it just kind of it felt like less like it just kind of felt like more interesting because there was like more potential for deal making. And that was really fun. But like in my heart of hearts, I was like an early stage investor. I did like very early deals there. Like I did the Glossy B and the Masterclass C, which like, I mean, I was with a friend yesterday who's also an investor there. And like, the Series C was at like 133 or something like that, right? Like it's a different world. But like everything I did was like not a unicorn. It was like not like it was like kind of like on the earlier stage of like what we would do. And I found myself kind of like wanting to do earlier and earlier stuff. And then also like I found myself like I had all these ideas about like things we should do inside of our firm. And it's not that like IVP wasn't open to that. It's like I new ideas or doing things in a new or different way. But like the firm is older than I am. And like I'm not young, right? And like it's like, it's a 3,000-pound ship, like doing really well, like moving in one direction. It's very hard to move that. And like I just was like, for me, like I was just like itchy and I had all these ideas around like, okay, if you started a firm today, like what would you do? Right. Because there's so many things that like, we tell like as VCs, we like tell our companies to do, right? The way we compensate our employees, the way we think about like team structure, the way we invest in technology, like, and we don't do them in our own business. And like, to me, that felt dumb because like, we know those things work, right? Like we know that like that recipe is like a recipe for success, especially for like starting up from zero. So I had all these like ideas around like, how you should build your firm. And again, like, Renata and I like kind of happened onto each other and happened to like start like pulling this thread. And for me, it was one of those things of like, once we started talking about it, like the genie was out of the bottle, like you couldn't not. And it was less around like, I kind of never had this idea of like, okay, I'm going to do this and I'm going to do this and I'm going to start my own firm. Like that was not on my, if you had told me like, 10 years ago, I was like, leave my great job and start my own firm, I would have like, no, that's dumb. Why would I do that? But it's kind of like what's interesting you and exciting you and like keeping you up at night, like in the good way that like, you're excited, nights and weekends to like think about and spend time on. And I think like when you see those, like when you find those like kind of sparks in yourself, you got to listen to them. And I think like part of it's like gut, but it's also like that like excitement, like what's that like itch you really, really want to scratch. And I also just think that's something that's like so fun about venture, right? Like especially in everything that's happening now, like one of the reasons I love this is like I was like an internet kid, right? Like I was like a dorky, like built computers kid, spent like so much time and like ICQ and message boards and like all this stuff. Like I was not a cool teenager. And, like, I feel like we kind of get to do that again with all this AI stuff, like getting to play with stuff and build things and like mess around. And like, I'm like, I love that, like, was like trying to make some like art for our new office. And I was like playing around yesterday with like all these different things. I was like, I'm actually working right now. Like, that's so fun.
Yeah, it is kind of fun. I mean, like all of us investors are, I mean, we have to play around with the tools that we're going to invest in. But yeah, it is kind of work. Like we've been messing around with vibe coding, building internal tools for the fund, and of course, all these creative tools. It's a really exciting time. So you guys met at this dinner, had a great conversation, had that aha moment. But this was at a time where it wasn't that common for partners to leave and start their own funds. So, I mean, starting a fund at any point is risky, but I'm assuming, I mean, it's kind of trendy these days, but back then, yeah, it was a way bigger risk. So, what was kind of the next steps from there after you guys connected? And what were the early days like building Renegade Partners?
It's funny because I feel like when we like first started, like all these LP, like people were like, did you get fired? Like, are you doing this because like you don't have a job?
There's something wrong.
Right. Because like nobody was doing it. And I remember when we were talking to LPs, I was like, I swear to God, like when it got announced that we were leaving our firms, like the number of phone calls we got from a lot of people who today now have their own firms, like the number of phone calls that we got were like, off the charts. And, around like people who were kind of thinking about the same things as we were. I think we were just early. And frankly, like I think it would have happened sooner if COVID hadn't happened. Like I think that, and like in 21, like I think that slowed everything. Like I think that slowed like a lot of the departures down. But I mean, the early days, like 2019, we like lived on planes. Like I mean, it's also just like, it's even like thinking back to back then, like it was like a different time, right? That you would like go see every LP in person like multiple times because like, just there were the number of video meetings we had were like minimal, right? Like everything was in person. But so we just like, we spent so much time just like talking to people. And I think getting LPs comfortable with like us. Like, I think the feedback that we got, like people like, yeah, I think like the idea of an emerging manager of people like leaving their jobs when they didn't have to was like weird. And also like a new partnership, right? I think that like partnership risk was a big thing that like, everybody was trying to underwrite. And so we went hard on it, right? And also like for us, like we knew like, it's like, we're going to basically like get married or like better, tie our careers to one another. Like we have to be sure about it. So we like spent a lot of time, like we did like marriage counseling and like personality testing. We had our like personality tests in the like data room.
Yeah, LPs could read it, like, yes, put it all out there.
Which like is so funny now because I feel it's like, oh, like there was all this like vibes, right? But yeah, it was a lot of like pounding the pavement and finding believers because also like a lot of LPs back then like had never done a fund one or had never done an emerging manager or hadn't done an emerging manager since like or Felicis was the last emerging manager that they did or like Andreessen, right? The idea of like these kind of spin outs wasn't normal. So I feel like we were doing a lot of also like market education. And we told LPs, we're like, you're going to see a lot of these. Like, I swear to God, like people are going to this is going to be a thing. And there's a ton of people leaving established firms to go out on their own. Like it took a little longer, but like that definitely came true.
And, I think we had a couple of points of view on how we wanted to build the firm and the area that we wanted to focus on that in the long term are definitely the right thing to do. But in the early days, it made it a little bit harder for the main street LP to understand because in terms of positioning, right? So many of other GPs that we talked to, they're like, just say, I did great things. Look at my great track record. Just give me money because I'm doing it now in my own terms. And Roseanne and I never believed in that as a value prop that would put our lives or our money behind. So we're like, okay, what is this stage we want to invest in? How do we want to help founders? What do we want to do that, will make the best founders in the world want to say yes to us? So we actually landed on this, moment of you found product market fit. You know what you're selling, who you're selling it to, and now it's time to grow from startup to company, to build exec team, process, infrastructure, like this grow up, and we internally call it the teenage years of companies. And we said, this is such a moment for value creation. We've been on boards of like many category defining companies across so many industries. And we knew that like if you nail this right, you continue to compound at a rate that takes you to iconic status. And if you don't, it's a big missed opportunity. So we said, that's where we want to focus on. And, you know, when we would talk to some LPs about that, they would kind of get confused. So now we just say Series A because then everybody understands. So we learned, we heard the lesson, you know, we heard the point of view and we adjusted to, okay, just package it how your customer, you know, understands. So one less degree of weird. And then the other thing was around using decision science. And a lot of the stuff, like we say, okay, what are we giving to LPs is investment returns, and what drives those returns is decisions. And we say, this is a skill. There are decades of Nobel, you know, winning literature and science out there. And this whole thing of I know one when I see one, there's just so much embedded in that we wanted to turn that into something that we make objective, we learn, and we keep doing better and better and better. So we've been working with this woman, Annie Duke. She's a special partner to us since the beginning of the firm on like the way that we create investment process, follow on. So we have a point of view that is not, you know, your main street, main Sand Hill Road type of way of doing things. So it took us a moment to find the believers, LPs. And we're very lucky that we have institutional LPs from day zero, Ivy League endowment pension funds, foundations, etc. But it took us, what Roseanne said, like pounding the pavement, being on planes a ton, and it was not glamorous, not pretty, and we're very happy we did it that way.
Well, that's great. I feel like the best things never start out so pretty, but hey, you have to put in the work to eventually get there. Kind of a side question. I want to take your hot take. Do you guys prefer the in-person and flying around all the time, or the Zoom world we live in today?
Oh, I never done it. This is like bored to me. Or like this is like my like internal battle because we just built this like beautiful new office. You gotta come check it out in Jackson Square. It's amazing. And it's like being in person there, like nothing keeps being in person, right? Like it's just like it's so much more fun, right? And every level, right? Like the amount of it, like the style of interaction, the amount of interaction. But at the same time, like I also love efficiency. Like you can't beat the efficiency of the video. And I think like, you know, that's a double-edged sword, right? We saw like the efficiency of 2021, right? Like everybody's at home, everybody's like 80 companies a day and, you know, just spend money like drunken sailors. You know, I think that you just like, you lose so much, but at the same end, you get a lot of efficiency. So I think it's like, I don't know, it's hard. Like, I think it's a really hard like balancing act, but I don't know. I love spending time like in person together. I like for us with our founders, I just don't think you beat it. But I also feel like the pace of the world, like you also gotta do some zooming.
Yeah, well, I think, you know, the early signals of things, right? Because you have maybe a first conversation that's just not a match. Like when you're pitching an LP or whatever, like I'm not investing this year. I've never done an emerging manager before. And imagine you have to get on a plane, go really far and spend a day, maybe two, to just get that signal back of we're not for each other. So the quickest way to just understand we're not for each other right now, lower friction, I like that. But then from there, it's like, no, there could be a there in person all the way.
Yeah, that makes sense, especially when you're starting out and they given your emerging manager position back then. But I'm correct that you guys are currently deploying out of Fund 2, right? So were there any key differences to raising Fund 1 versus Fund 2? I mean, I'm sure you already had those established relationships that made it a bit easier, but were there any market dynamics at the time or see any market dynamics today for emerging managers that are different than when you first started?
So our LPs joke because our fund cycle is every 3 years because we really believe in, so one, we want to work closely with founders. Like we say partnership is our product. This is what we love to do. We wanted to build a firm that allowed us to do what we love and we think will create value for founders. So velocity in deployment does not jive with that. And then when it goes to LPs, we also think that exposure to different market cycles, you know, takes a little bit of beta out of the returns. So every fund for us calls up on a 3-year pace. First close of Fund 1, Friday, March 13th of 2020. Everybody was going home to prepare for quarantine. The world could have ended that day. We didn't know. So like that was Fund 1. Fund 2, it was the big, you know, 2 bank crisis, market correction out of, you know, the 2021 craze, public markets, reevaluation. So our LPs joke and say, okay, what the hell is going to happen in the world when you come back for Fund 3? Because you really time it well.
Yeah, we have like, it's funny because we had we're actually the first close of Fund 2 in I think it was like April 9th, 2022. And I remember I was like, oh, the stock market, like stock market is really going down. Everybody must be like selling to pay their taxes. And it like never stopped. Right. And we ended up ended up slowing down deployment. Started closing in in 22. We didn't start deploying until 23. But yeah, 2022 was like fundraising in 22 was like a desert, right? Like everybody was so shell shocked, right? Because like Russia had made it in Ukraine, the SaaS fell off a cliff, the public markets were in the garbage, right? Everybody was like super freaked out. And so yeah, so we have like really great timing, I would say. And it doesn't right. And it doesn't matter. And at the end of the day, because yeah, right, you have like no control over it. And it's not like you're gonna we're not we're also like you don't want to miss incredible vintages, right? And you don't want to miss incredible opportunities. So it's like you just have to be consistent and like and ride through these ups and downs. And so yeah, but I think that's a place where like you just have to have like, it's like it's yeah, like I would gird your loins, like right, like it's like guts of steel because it's like it's really fucking stressful when you're trying to fundraise and like the public markets are going sideways and everybody's like, oh, we're done deploying for the year, and it's like April because that's what happens. And so I don't know, it's just like you have to deal with like it's just like a reality you have to deal with.
Yeah, no, I appreciate you sharing. Definitely, probably a lot of good, if it was a longer podcast, could ask you about all the stories of how you had to go through navigating those crazy times. And I mean, raising a fund, which, yeah, it's not an easy thing. But going back to, how Renegade Partners works in practice. So first I want to start with the side of you are pretty concentrated portfolio, very hands-on with your portfolio companies, and you focus on these teenage years, yeah, where you mentioned where a lot of value creation could happen. So I'm assuming you're very hands-on. What does that look like in practice? And usually, what do your founders need at that stage?
So our first hypothesis when we started Renegade and we identified that moment, right, from startup to company, we said, okay, this is very like people heavy. And the type of people and the type of talent you bring is like the R squared between that and success is 1, essentially. So we said, okay, for operating support, we want to lean in on people, and we want to lean in on people and with a unique point of view, right? Because like a lot of the market supports recruiting, supports, okay, you need someone to fill a role. Here's a Rolodex, here's access to a very latent request, which is very important. But we felt that there's more to people than just the who does the job, but this idea of like, how do you build a bus? What's the right type of talent you need, right? Like, how do you build the org structure that is right for your company at the right time? So this idea of like the how of people that meets the strategy that you want to do is a strong hypothesis we had. So that was our first hire, is our operating partner, Susan, who's been with us since the beginning of the firm. She was eBay, PayPal. Then she launched Uber Eats in San Francisco. And then she realized, oh, wow, I'm here at the darling of tech with unlimited amount of capital. And the difference between success and not is having the right person doing the right job. So then she moved into people function at Zoom Pizza from 4,600 in less than 3 years. Like, done a lot, executed a lot. And so she helps our companies on this, like, how do I build a bus type of thing. And then Roseanne and I, we will go really deeply on how do you build a business, right? The right business engine. We've seen a lot of different types of industries, business models, so conversations around go to market, what are the right efficient metrics, the right level of experimentation, pricing, like so many things that is so age appropriate. Doesn't matter if you're selling to aerospace, if you're selling to biotech, if you're selling to traditional tech companies, you're kind of going through those same questions. So it's like a really nice way of interacting with companies that's super high value add with the point of view that is not, sort of commonplace. What did I miss, Rose?
Yeah, and I think like to me the big one is like when people are asked like how do you work with your companies, and it's like, well, like it depends, right? Like every company is like a little bit of like a special snowflake. And I also think as an investor you have to like look at like also like what is there and like what is not there, right? Like every company we invest in like already has investors. I feel like one of the best like lessons I learned from like growth investing, like one of my partners had like two gems, but like first one being like VCs on boards are like martinis. 1 is good, 2 is nice, 4 is like way too many, and which is true. But the other one is that like every board you walk into exists, right? Like like it exists before you got there. There's like hierarchy, dynamics, beef, stuff you're never going to know about, right? Walking into that room. And so like your job is to be like a sponge and like see everything that's going on and then like pick your spots, right? Especially if you're like, I mean, at the growth stage, if you're the fourth or fifth VC walking in that room, right? Like, are you going to be a headache or not? And so I think that's true even at the early stage, right? Like, especially today, pre-seed and seed are so mature and so institutionalized, like there's often a lot of folks around the table. So I think it's also just really important to like understand where your companies are, like what they have and what they don't have. Cause like you don't need to like reinvent the wheel, or you don't need to like harass them about something that somebody else is already harassing them about, right? Like they know. And so I really like, I think it's, for us really important to set like, and something that we do, and I think Renata does like a particularly excellent job of like reading that room that the founder is in and like picking your shots and understanding like, what do you need help on? Like, is it pricing? Is it hiring? Is it, go to market? And like, how do you like kind of target in on that? I think it's just as like a VC, it's really important to know like what you're good at and like what you aren't, right? We have a company that's like wants to do this kind of like wants to build this like big consortium. And so it's like, okay, like how do we use like your cap table to get as much coverage around like the industry as we can, right? Like in that case, like we can bring some, but like how do we make sure that like we have like every base covered and like figuring out like who knows what and who knows who so that you can do that. So I think like, I don't know, to me, that's like such an important part of it. And like, I would say like every company is different, and also like it changes over time, right? And if it's not changing, then that's like a problem too.
So Alpha Partners, we're passive co-investors. That's been more or less the seat I've been in as I've gone through my career. But when it comes to, okay, you have the board that's helping your founders, and then, making sure you're not harking over the same things and making sure you're finding the right board member, the right investor to kind of help that founder with whatever problem they're facing. How much coordination is there on the board level to say you help with this aspect? Like just a little bit of what is your experience like working on boards with these companies and, trying to find the most value, but also letting these founders kind of figure things out for themselves?
Oh, I mean, I think there's like a spectrum. And I also think that's like a reason why there's like folks that like invest together a lot, right? Our most recent investment is a company that like I invested in with somebody that I'm on a board of another company, right? Because he and I really like to work together and like we know what it's like to work with the other and like what the other one operates like. And, I think that often like it's like not like super premeditated. There's not a lot of like coordination, but like there are like relationships that develop and like, I have like boards where like I've become really, really close with some of the board members and like would work with them 10 out of 10 times. And then there's also like situations where like I've had very difficult boards, especially, I think for companies that raise the grounds at big prices and then like performance isn't there, like it can create a really tough dynamic in that boardroom. And navigating that for a founder can be really hard. And I also think like as a board, like when you see that, like it's also like as a board member, it's like your job to help fix that, right? Like we get to see tens of boards, like hundreds of boards, tens of boards over our career, like a dozen boards at a time. And your founder's only seeing one, like, usually, right? There's always founders that send out on the boards, but like the rule is like they only see one. And so like when you see like really unproductive behavior, like from other investors, like it's your job as an investor to call it out and also like help the CEO navigate it, because I mean, your board's never gonna like make your company amazing, but like it could really fuck it up, right?
Yeah, fair. I appreciate that insight. I just want to go back to the whole decision science piece of how you evaluate companies, just because it's incredibly interesting. At least with us at Alpha, we have a little scorecard that we use to evaluate our deals, but it's 7 different criteria. So it's pretty small, half art, half science. But from my understanding, your process is a lot more sophisticated and robust than ours. So without revealing your secret sauce, can you give a little bit more insight about how you evaluate deals?
Like I mentioned before, Annie Duke has been like very much instrumental in helping craft that, but this is also what we believe can help us create value. So we jokingly call it create and watch the game tapes. And, so the scorecards, they serve for us 2 purposes. So one is creating a common language. So before there was a deal actually to be made, we sat down and we said, okay, what do we think are factors or things that could encapsulate what a renegade deal looks like? So we started to create a common language. And then we also made definitions, right? So let's imagine that we're talking about business engine. So we actually have sub-criteria that we define what that means to us. And then we go and score things based on that common language. So it really helps us to have that framework and something that is very objective. So that has been one amazing value add because it's all very clear. And then the other piece is we have the quantitative score, but then we're all, for every factor, required to say why. So we also have to explain the rationale. And because everything is so objective, when it comes to actually making decisions, we can look for where are areas of dispersion and where's one person seeing value or risk and somebody else is not. So then we're like, okay, this is where we need to focus on for this particular company. So we can actually take out the things that don't matter that we're all agreeing and say, okay, this is the jugular for this company. Let's do diligence here. So which makes us a lot more effective. And like Roseanne said before, like every company is special, no snowflake, right? And this allows us to quickly identify where to spend time on. So it's made us more effective in our process, quicker in our process. We can waste less founder time because we say, okay, these are the questions that matter for you. And things are a lot more clear. And then the other piece of it now is that we have a trove of data that we can go back and say, okay, where are opportunities to improve on the way we diligence, on the way we think. We can now say, oh, Roseanne is amazing at identifying what creates value in this type of category. So, for example, okay, product. She really spikes here. So let's actually over-index when she likes something that has predictive value. So like there's so much that it allows us to do because we've been doing this for 5 years.
Yeah, I could definitely see how, just collecting all that data just over time just compounds about how efficient you are and just unlocks a lot of insights. So I guess one of my last questions before we wrap up is, like we've talked about, you both have a wealth of diverse investing experience, plus the whole process of building Renegade, going through this whole data science thing, and just going through so many different cycles in venture. What are the most significant changes and trends you're seeing today versus as you've gone through your venture careers?
So I think in venture as an asset class, when Roseanne started this, one of our hot takes was the bifurcation and like the big platforms, multi-asset and boutiques. Now it's very clear. And I think the surprising piece of it is I don't think we predicted just the pace and the size of multi-platforms, right? That is like a very different dynamic of investing in technology companies. Doesn't matter if it's everything from super early stage all the way to debt. And that is a very different way of thinking and funding companies that you can get billions of dollars potentially in the private markets if needed be. And that's because of the way I think capital formation has been organized in the past, 7 years or so. So that was one evolution. And then I think also when it comes now to just company creation and AI as an opportunity, right? And I'll let Rose chime in there too, but also like the way companies are going to be built and the types of efficiencies and the business models that are going to come out of it. There's going to be a lot of change in their cost structure, efficiency of companies, the way teams are built, what is going to be core capability, right? Like, are we getting to more like product and product sensibility being more valuable than engineer? Like it used to be, right? Engineers were the king. The past decade, it was a different type of skill set that was the most valuable. And like, what is it changing now? And what is going to be the spiky thing that's going to deliver value for companies? Very exciting, both on opportunities and on how this business is going to be executed on.
Yeah, and I just think the pace of change is so exciting. Exciting now, and like even just thinking about things that weren't even possible and are now are now possible. And like we've done a couple of these like AI companies that are like the selling the work companies, right? Like selling like the end product instead of selling like a AI powered copilot or tool or something like that. I was on the board of Compass for 5 years, kind of like looking at like the last generation of tech enabled service versus now, our bet is this is not going to be like a 50% improvement. It's going to be like a 10,000x improvement. But like, I'm super curious about like how that's all going to play out. And yeah, also like who's starting these companies, what's going to be important. Again, I think like as more like writing code has never been easier, right? Like building products has never been easier. And just because things get easier doesn't mean that everything gets easier. It means that like, just like, I think, it's like a hose, like the kink just ends up somewhere else, or like the pool water starts pooling somewhere else. Like, right. Like the kinks don't go away or the hose doesn't get bigger right now. But so like what's actually really going to be important on teams? And I think that like all this people stuff and like knowing yourself and knowing like the types of people that you want to work with and the types of like people that you want to have on the team, because skills are going to be so fungible and change so much that really, I fucking hate everybody saying taste, but like it's really more around like point of view, but also like your ability to like understand what your customers want and need and like deliver that in a fast, efficient, like elegant way. Like it's just going to be so much more important. So like, I don't know. I think like watching the people stuff change right now is like so interesting and exciting. And like just watching people, like the barrier to start a company getting like lower and lower and lower is like amazing. Right. Like when I started a company, I like had no idea what I was doing and I was like 25 and like, and it was easy because there was like things like AWS and Facebook and all that stuff. But like now it's like, it's even easier. Right. And so like the things that were hard, they aren't like were hard for me aren't hard for that 25-year-old today. And that's amazing. Right. Like that means that like the number of 25-year-olds that are going to start companies is just higher. Right. Like you lower that barrier and like more people can cross it. And so like that's what makes me like so pumped.
Well, and the cool part of it all is that what we believe, like that execution and people being a key piece of execution is going to matter. Is like, I think it's truer than it's ever been. Right. So, and we're here for it.
Yeah, I know I said that was my last question, but I have one more.
Yeah.
So, I mean, it's like you have all mentioned, and we're seeing it too on the gross. I mean, all investors are seeing it. It's just the barriers to entry to build a company are so much lower. We're reaching ARR numbers faster than ever seen before with traditional SaaS, younger people, smaller teams, just building companies, and just a lot more competition within a certain sector but we also have the dynamics too, where yes, everything is growing much faster. I was actually just joking with someone yesterday, like, oh, like you have ARR, but now we have EARR, experimental ARR. And like, that's going to be a line item we look into now. And yeah, I mean, barriers of entry are so much lower. So it's almost harder to, I mean, imagine at the growth stages, like I actually have more of an ecosystem, more numbers, more time I could look into, but Series A is still really early. So how do you guys deal with all the noise in AI? And I understand it's the people piece, looking at the people, but like there's probably a lot more people and talented people building in the same sectors too. So how have you changed your investment strategy and what's your thesis when it comes to investing in these AI companies where, yeah, there's just much more going on than before?
Yeah, I would say like actually like I would say like what we do, what we look for hasn't changed that much, right? Like AI makes things happen faster, but also like there's been a lot of really incredible companies like that they're like like it's like easy come, easy go, right? If the barrier for a customer to start is incredibly low, that the barrier for that customer to like leave you is also quite low, is also generally quite low. And so we've seen a lot that have like really incredible growth, but have incredibly high churn, or like, I mean, yes, if there's the experimental ARR, but there's also even just the like ephemeral ARR, right? Of like, I'm, spending $20 a month on like 4 different product building vibe coding platforms. In 2 months, like, am I gonna have 4? No. Right? Like, I might have 4, there might be 4 different ones, right? Like, I think there's just so much like testing and playing today that like we really think about like durability comes up to that like the top of the list. Like it mattered before, but today you have to be like,
Yeah.
you can't be seduced by top line growth because I think a lot of it's just at the cost of durability. And that doesn't mean like there are going to be like that all those companies are bad. Like there are going to be some great businesses built there. Like don't get me wrong, but there's also going to be a lot of things that like have crazy numbers and are going to raise off of crazy momentum that just like there's not a there at the end of the day. And so like we try to think a lot about like, a lot of our things have been, a lot of our AI investments have been more at the infrastructure layer or like the tooling layer, right? Like things that like that enable enable use cases across multiple foundation models. Cause like, I think that's where the world is going. And that's where the world is, right? And I think there's like good reason for the world to continue to go that way. And then also like how like, is this like a workflow? Like, is this a workflow that like it gets embedded into like the way somebody does business, and like are multiple people in a company using it, right? Like if like single player mode is like if you're a single player mode company, like that means you're very easy to take out. So I think it's just like trying to really understand like what's true recurring revenue versus like, or true like contracted recurring like durable revenue versus like stuff that can churn really fast.
So we actually spend a lot more time with customers
Yeah.
to really understand, is this something that you use all the time to do something that is very valuable to you? And what is success for this particular tool or product in your org? And you'd be surprised, there are like a lot of companies that you talk to the founder and the worldview of that founder of what the customer workflow or expectation of their product is so different. Like the customer cares about something else, or customers are experimenting with 3 or 4 different things at the same time. And it's like, yeah, I buy this, but I also buy this other thing. And the founder is either oblivious to it or discounts it. So actually spending a lot more time with customers, understanding what's the need today, what's roadmap need. The other piece too that we're finding more important is pricing and cost. In the early days when you're just experimenting, the pricing of things, you just pay whatever because also they're not at scale, the volume is small. But when you're thinking about flipping something to true adoption, cost is a very big consideration. And, how do customers feel about the pricing model vis-a-vis what the founder believes that they can extract going forward? Sometimes you'll find a huge gap there, actually. And, talk to a customer's like, oh, I already think the price is full and they better keep on delivering. And the founder believes, oh, no, we can charge more because there's so much more value. Those true realities don't match, and rude awakening, right? So spending time with customers is even more important, and that's where we're double clicking on, way beyond the numbers.
Okay. I appreciate those insights, and I'm sure a lot of the VCs and founders in our audience do as well. This was a great podcast. Thank you so much, the both of you, for joining. A wonderful discussion. I just want to leave the floor open if there's any final takeaways you want to share with the audience, or if there's ways to reach out to both of you.
Yeah. Twitter, LinkedIn, and our emails is Renata at Renegade Partners, Roseanne at renegadepartners.com. Yes, we love what we do. And yeah, happy to work with more great founders. And thank you so much, Zoe, for having us. This was a lot of
Thank you for having us. This is great.
Again, thank you for joining. All right. Thanks for tuning in all.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.